time for the big three now. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Thank you both for being with us. So you have Boeing on the mind here. Scott, tell me a little bit about why you're watching this one.
You know, it's so tough on a market day like today where you've got this massive sell-off, massive volatility because of COVID, right? So we don't really know where fundamentals and or technicals come into play. But then you have that kind of exacerbated by the fact that it's a holiday, really, and that there's very light volume. So you're getting lots of moves that are, I don't want to say, you know, just too quick, but you're getting moves that you wouldn't ordinarily see. And I think Boeing, this move to the downside, as with many of the travel stocks, is probably a bit overdone. And I don't want to minimize any of the concern that anybody has with COVID or the spread of COVID or the new variant. I think it's a little bit overdone here. So in Boeing, I'm looking to take advantage of this massive sell-off. We're talking, this is down, what, almost 20%, you know, about $40 since where we were just week and a half, 2 weeks ago, and also pretty expensive option implied volatility. So what I'm doing is I'm looking at next week, December 3rd options next week, and I'm selling a put spread. I'm selling the 195, 190 strike put spread. That's right at the money here. I can collect about $2. So I love the support, first of all. So there's really some decent technical support in the 190 to 192 area here in Boeing. And again, I believe this sell-off is overdone. If I'm wrong, if this thing does continue, okay, that's why I'm trading a spread, because I want to have my maximum risk always identified. So I know what this can be worth. I'm not open-ended. I really think this is a good opportunity, though, to collect a nice chunk of premium.
Okay. So, and the sell-off today, as you said, down 7% plus, but well off of those earlier highs if you take a few trading days and you put them together. Ben, your thoughts about this chart and this trade?
Hey guys, good morning. Well, I think we need to do just that. First of all, look at just today and what we're seeing in terms of the news, the headline, the reaction to the COVID concerns, and then ultimately look at where things stand in terms of the bigger picture. And I think we need to do that with all of our stocks that we look at today here on the Big Three and in our portfolio for that matter, because as the indices are just coming off recent all-time highs, I mean, in theory, all of these shocks to the market that we've seen in years past have been buying opportunities. So this could end up being just that along the bear trend environment that we've been seeing and talking about to the upside. But here's a look at the most granular, the 1 minute time frame, and the shock that Boeing, they've been grounded on this news, as you can see, currently trading down by about 7.5%, a gap lower and down to 194.13. Still no rejection of that lower level at this point. They were up around 211 yesterday. A quick look at the 30-minute time frame shows that, well, this move here we were just looking at, the gap lower, guys, this is part of a bigger move that we've been seeing. So coming off the 235, 234 level, and a 60-minute, the hourly candle show that, well, that 234 high that we just looked at was a failed attempt to break up above the highs from earlier in October. We saw up around 232, 233, and well, now we're below the October low. So taking out the October lows after taking out the October high, that's a classic rejection type bar if we do close below that last month's low. I do want to point out that, well, 241, again, a breakdown from that level was really key at this point here. And here, let's take a look at the daily time frame. You can see how, well, again, 241-ish was the area that we recently struggled with. 280 also key. And just to look at the big move that we saw from 446 down to 100-ish, we'll call it 89, 90, and then how we're kind of in the middle of that. Lastly, I do want to point out here, again, as we look at the 50-day moving average, a very similar chart here in terms of the move lower, but in a bit of a holding pattern at this point. And I guess, well, somewhat turbulent as we just gap lower. And again, we're coming out of a pattern where it did look like investors felt like they were comfortable walking about the cabin. But again, this is going to, as mentioned here, create a little bit of bumps along, or a bit of a descent here and a bumpy ride along the way, it seems like.
Yeah, I think you make a great point. Now, Scott, as you take a look at what Ben's saying here in this chart that he's put up showing the averages as well, I mean, these kinds of days can really be opportunities for traders. Ben made the point that every big sell-off ended up being a big buying opportunity. What are your thoughts on this kind of action on a day like today?
I think there's a lot of opportunity from the volatility standpoint and a lot of opportunity to sell premium on a day like this where you can collect more premium. But I always do that again by trading spreads. And I always do that so I limit my risk so that in the case of, worst case scenario, disaster scenario, I know what my maximum risk always is. I'm never open-ended. So, as traders on the floor, and Ben certainly knows this, we used to just thrive on days like this, especially days if it was a holiday, maybe a little bit lower volume, less traders around. You get a big spike in volatility. So I think there's always opportunity on a day like this. However, you can't just close your eyes and say, okay, I'm going to do this, I'm going to do this. It always has to be carefully crafted. It always has to be completely risk-defined.
Yeah, and now on this type of day, it's not just a sell-off, it's a sell-off that's really in correlation with the concerns about COVID. So then you have Expedia, which everybody was so excited for the reopening. Now what? You're looking at this. I don't know what kind of trade you're thinking here.
Basically the same kind of macro view as I did with Boeing. I think this is a little bit overdone. Again, COVID is extremely serious. Yes, it affects these travel stocks, reopening stocks. I think this sell-off is a little overdone. But I also think, though, that Expedia is not going to recover quickly. I think we're probably going to be in somewhat of a holding pattern. So to me, as a trader, when I think a stock is going to maybe consolidate, toil a little bit, but volatility is really expensive, that really presents an opportunity to do something that's called an iron condor. And that is selling. It's a combination of selling a downside put spread and an upside call spread. And what you really want to happen is for that stock to just remain in a fairly, tight range or the range of the strikes that you're using here. And I think this is a great opportunity in Expedia because, again, we're getting a massive amount of implied volatility, meaning that the options are much more expensive. So what I'm looking to do here is sell next week's 157.5 and 152.5 put spread. At the same time, sell the 170, 175 call spread. I can collect $2.50 for that. So at the end of next week, a week from today expiration, my break evens on this trade are 155 up to 172.5. Anywhere in that range, I'm going to make money on this trade. I love that opportunity. Once again, though, Nicole, I am completely risk-defined. If we break out of that range, that is why I'm trading spreads on both ends of this. And so I know what my maximum risk is.
Yeah, you understand what he's saying there, right, Ben, with how he's handling the risk and obviously the potential.
Absolutely, and that's what stood out considering the circumstances, the fact that, again, we're trading based on headline news right now. I mean, we could come back Monday and we could be right back up. We could rally back from these lows. It's anyone's guess at this point, really, where things are going to go, or it could get significantly worse. I mean, depending on what happens over the next few days. So I like what Scott pointed out in terms of being risk-defined on this one. Let's dive into the charts, though. I think Scott made a couple good points, and I want to provide some visuals in terms of, or to support what Scott was talking about. First and foremost, some of the selling on the most granular time frame. I mentioned how with Boeing, I think we need to look at all of these stocks with just first and foremost what happened overnight and then where things stand on the bigger picture. So similar to Boeing, the selling, the gap lower, and zero rejection of these lows right now. In fact, we're on them as we speak. We're 41 cents off the extreme low from earlier this morning. We're talking 156 last down, 11.5%. Travel stocks getting hit in general, so Expedia is not alone, but similar to the point I made with Boeing, this didn't start today, Nicole, Scott. You can see some of the selling that's been playing out over the last couple of weeks since the beginning of November. Quick look at where things stand on the daily time frame, because I want you to take note of now this gap has us back down below the 50-day moving average, but take a look at this, Scott. I like your point here in terms of you said, well, we're not going to recover quickly. You said you think we could remain in a bit of a holding pattern. I like the range that you're in, and let me explain why. This is the weekly time frame. You can see the run-up that we saw and the consolidation that we've been in. Bit of a double top around 191, 192. That's a bit higher than Scott's strikes. They're in that 175, 152-ish area, I think it was. But basically, once we kind of work our way into the middle of this range, oftentimes you stop and you kind of get a bit of a breather. So I like what Scott said, how we can consolidate here right in the middle of this range. But if we do build momentum to the downside below 150, below that 155, 150 area, 147, I think we could open up a door for a retest of the lower extreme. This is an area where we oftentimes just kind of chop around these consolidation areas. They're very random in terms of price activity. That's why I say it wouldn't surprise me to see this one move back up, excuse me, significantly from these lower levels. But again, guys, I like the risk-defined aspect, and this is another big name to keep an eye on in the coming days and weeks as the dust settles from all this news.
Right, and as you said, who knows, it could get worse next week. And you pointed out that 50-day moving average, obviously another key indicator that we're watching. So that's obviously, we'll leave Expedia there, obviously one to watch and some good trades there. And then there's Goldman Sachs as we look at what's going on here with bond yields, right? Earlier in the week, people were eyeing 1.7, different picture now. Yep. Tell me, Scott, about your thoughts here when it comes to Goldman Sachs, some of these financials, which have been in favor regardless because of higher yields.
Exactly. And I look at Goldman, I look at JP Morgan, pretty much the same here. But I think there's an overreaction again today, just as we've seen an overreaction maybe to the upside on rates. So we saw Goldman, trade up to 415, 420 on those big rate hikes or the big rate hike expectations. I see the same thing on the downside here. Yes, it is COVID-related news. People are looking at this and saying, okay, this is really going to hit the economy again, which means the Fed is going to have to slow down either potential tapering, potential rate hikes. I just don't see that happening. I really don't. I think when the dust settles here, we kind of get back to the fundamentals that the market was trading on, especially from the financials over the last few weeks. So I love the opportunity here in Goldman Sachs. This thing is coming down to its 200-day moving average, which is down around 372, a bit below where we're trading right now. Again, option implied volatility is starting to get pretty expensive. I want to take advantage of that. So I'm selling a put spread going out to December expiration, December 17th. I'm selling the 377.5, 370 put spread. And I'm collecting a real hefty amount, about $3 for that. That means my break even at December expiration, Nicole, is right around 374.5, just above where that 200-day moving average is. The reason I really like that is because if Goldman gets down to that area, I'm a buyer of the stock there anyway. That's a place where there is a clearly defined line in the sand that there is support in this stock. So I would buy stock there anyway. This gives me the opportunity to sell some really expensive premium and play it that way.
All right. I want to also note here that the Dow is now down over 1,000 points as we're having this conversation. And we'll continue to take a look at these financials, Ben. And I'm curious to hear your thoughts on Scott's trade. But it's a day that, when you see a Dow's down 1,000 points, that's the biggest sell-off since October of 2020. It can mean opportunity, but it could mean more to come for next week. Ben, your thoughts on these financials, Goldman Sachs in particular, on the heels of Scott's trade?
Well, again, another stock that's coming under pressure, has yet to reject the lows that we've seen from today, but the move to the downside today, part of what we've seen over the last few weeks. Dive into the intraday, the granular with me first and foremost, so you can see the extreme nature associated with today's selling, the fear tied to the COVID's concerns, what it means for rates, and ultimately the ripple effect that this could have on banks. We're down 3% right now in Goldman at $384.72. We basically got down to 382 in the overnight. I do want to point out that these stocks aren't really adding to the losses at this point. So again, Goldman has yet to extend some of the weakness that we've seen, but off the move that we saw yesterday from 407, again, down to the 384, 382 low, but currently trading 384.55. Now, as mentioned, though, this gap lower today, the weakness we've seen Take note of a couple things. First of all, holding up above last week's lows of 381. So again, just to point to the selling, the magnitude of it, but the follow through has been limited. Here you can see, though, it wasn't just today. This is part of a bigger move off 426 from the highs in beginning of November. Quick look at the daily time frame. You can see just this area of consolidation that we've been in. So after what we were talking about similarly a minute ago with Expedia and potentially Boeing, after recently breaking down through the middle of this range, look, we're right back to testing the lower extreme, the 380 area. We've been in a range since August of this year, and 50-day moving average was where I've been watching. We just broke down below that, and I do want to point out, Scott was talking about the 200-day moving average. Here's just a quick visual to support that, and we're basically just above that right now. So again, but I'm watching this 50 just having recently given way, and some of the weakness associated with taking out the middle of that range, again, that we had been in since August. But right now, this is the area I'm watching here. So investors want to see this thing hold up above 370 at this point. And if anything, find support down there. I mean, again, these dips have been buying opportunities in the past. So something to keep an eye on here in terms of the bigger picture. Taking a step back from the intraday, the granular under these circumstances oftentimes is a good thing for an investor.
Thank you both, and a great chart there, Ben. We appreciate it. Thank you both very much. An important day to be on and give some trading ideas, but also taking a look at the Dow, which is down over 1,000 points today. Scott Bauer of Prosper Trading Academy, thank you very much, CEO there, and Ben Lichtenstein. Thank you both, and I hope you have a beautiful weekend. Thanks.